maybe by the end of next year, the entire US population. Maybe it even goes global in 27. I think as those things happen, you're going to get one of those vertical moves higher in Tesla stock, and patience will be rewarded with profits. That's my view on the stock. It's again, I like to look at history, look at patterns of behavior. That's how the stock acts. Vertical, sideways, vertical, sideways. And I think now we're about to go vertical again. So I think we're going to see a lot of strength in the crypto markets. I think Bitcoin's going to go to $150,000, $200,000 by the end of the year. I think 200,000 is a very reasonable call. For some folks, it's worth it. For others, it's not. But I do think that the rally we saw from 50 cents to $5, yes, in part powered by memes and Wall Street bets and short covering. I think there's more to it than that, and I wouldn't be surprised if the stock pushes, up back towards 5 and up to 50. I think that's possible. Long shot, but possible.
Hello and welcome back to Being Exponential with Luke Lango, where we'll talk about the economy, markets, lifestyle, and technology, all from an exponential perspective. I'm your host, Brooke. It is July 29th. Earnings season is wrapping up, so let's dive right in. All right, Luke, I want to kick this week's episode off with a pretty polarizing stock. Their earnings report just came out. The stock dipped. I am talking about Tesla. Now we know with some of the EV cutbacks in that big beautiful bill, Tesla was hammered a bit, and overall the EV market has been hammered. But we know Elon is very, very optimistic about robots and AI. What is your take on Tesla?
Well, Brooke, now we know why Elon threw such a stink and had a massive divorce with Donald Trump, right? That big, beautiful bill is really hurting Tesla. I mean, dramatically. If you kind of look at their growth trends right now, I pulled up the financial model here at my Bloomberg terminal for Tesla. Look at these revenue growth rates. I mean, it's miserable. This is a company that, coming into that election was growing revenues around 8%, but then, right after the election, 2% growth, and then in the first 3 months of this year, minus 9% revenue growth, and in the quarter they just reported minus 12%. So, I mean, Tesla, everyone likes to think of it, oh, it's this big growth company. Well, it's not even growing right now at all. Revenues are actually, they've been down in back-to-back quarters, down essentially double digits in back-to-back quarters. And Q3, you can see the estimate here, another negative quarter in terms of revenue growth, so minus 1%. And look at profits, they're getting absolutely butchered. Minus 40% in Q1, minus 23% is adjusted diluted EPS in Q2. The estimates for minus 32% in Q3, minus 28% in Q4. And I think the free cash flow picture is just miserable. When you look at free cash flow, really important for an automaker like Tesla. Year ago quarter, Q2 of 24, and they were making 1.3 billion in free cash flow. 2.7 billion, 2 billion, 660 million, 150 million. That was last quarter. I mean, they're getting butchered on free cash flow, minus 90%, 89% year over year. So this company's in trouble. The core business is
Yeah.
in trouble. Electric vehicles have caught up. The competitive landscape is very full right now, and I would say pretty equal right now. I don't think Tesla has that many tech or cost advantages when it comes to other EVs out there. Not to mention that EV demand is just generally kind of weak. There's a lot of consumer fatigue about electric vehicles. There was huge growth in the space for a long time. Now that's no longer happening. They're having a lot of struggles off in China. So the core business is really struggling. Then the big beautiful bill gets passed, and you phase out the EV tax credits, and all of a sudden demand is going to really get hit. Not to mention that part of their business makes a lot of profit off of those tax credits alone. So everything is going in the wrong direction for Tesla right now. But I like to think of Tesla stock as it's the quintessential tug of war between a really ugly current situation and a potentially really promising future. And you have a lot of really smart people on both sides of the aisle. You have a lot of really smart value investors who are looking at these numbers and saying, how the heck is Tesla stock? I mean, despite the fact that it's not growing at all, the valuation is still super, super rich, right? You got Tesla stock trading at, let's pull up the valuation chart real quick. Trading at 150 times forward earnings. So we're trading at 150 times forward earnings for a company whose earnings last quarter dropped 23% year over year. So you have a lot of really smart value investors with data on their side saying, how the heck is this stock worth that much? It's not growing. There are a lot of growth headwinds over the next few quarters. Why are people paying 150 times forward earnings for this? And then you have some really smart people, some futurists, some techno optimists on the other side of the aisle saying, but Robotaxi is here now. It's in Austin. I think there's some pictures of it floating around online of it being in San Francisco. So now we're in two cities. Elon plans to get it up to 50% of the US population by the end of the year. Optimus is making big strides. We talked about Optimus in the Tesla diner last week. Optimus, he's saying 100,000 units per month. Musk is saying 100,000 units per month by 2030, so 1.2 million units. You can do some quick back of the envelope napkin math on that stuff. And if you scale to, 5, 10, 20 million units on Optimus at $25,000, $30,000 a pop, yeah, all of a sudden no one cares about this 11% decline in revenues last quarter. So it's this massive tug of war between the present and the future with some smart people on both sides of the aisle. And I get both arguments. I could argue, honestly, if you had to put me on a speech and debate team right now, I could argue, I think, very coherently and very strongly for both sides of this tug of war. But as an investor, as a stock market analyst, I got to decide which side of the tug of war is going to win. I can't say, both sides are going to win because that's not how this works. One side is ultimately going to win. And I do think the future is going to win here. I think that despite the massively ugly short-term growth trends at Tesla, and you got to acknowledge the short-term growth trends are ugly, the EV business is essentially dead in the water right now. Despite those things, I do believe that Optimus is going to become a household ubiquity. I do believe they're going to be retailing those things at $20,000, $25,000, and that you will see 50 to 70% of US households adopt it, maybe 30 to 50% of households in Europe and other kind of more established economies throughout the world. I think that's going to be massive. I think Robotaxi is going to be a huge growth driver for the company. So I do think that in 5 years' time, these short-term growth trends will become massive exponential growth rates, and that will power the stock higher. This would not work if it were not Tesla, if it were not Elon Musk. For some reason, and I think the reason is that there's a track record of success here, for some reason, this is the one stock that Wall Street is willing to sort of give a pass on short-term hiccups, on missed deadlines, on negative revenue growth, on negative profit growth, on free cash flow destruction. Wall Street is willing and has been willing for 10 years now, really, to give Tesla a pass on that stuff. So because Wall Street's willing to do that, I think they're going to continue to do that. That's going to allow Tesla to invest in the future, build for the future. And I do think the stock is going to be a big, long-term winner. But I say that fully acknowledging that there is a really good argument for why the stock is not a good investment right now.
That's fair enough. I think I read recently they just inked a deal with Samsung,
Right.
about $16 billion for Samsung to start building their new wave of chips. I mean, if a company as large as Samsung also believes in Tesla, who's to say that the regular investor would be right about Tesla failing, right?
Yeah, well, that is Tesla buying stuff from Samsung essentially, and so one of the quirky posts that I've seen making its way across the internet right now is a tweet from somebody saying like that deal sounds great, $16.5 billion, Tesla to Samsung making new AI chips in Texas. On the surface, it all sounds great, but the
Mhm.
question is, how is Tesla going to pay for that? Right? I mean, when you look
Right.
here at its financials. We got $36 billion in cash on the balance sheet. So they could take $16.5 billion and just drain that from their cash and cash equivalents. That would take it down to 20 billion. I don't think they really want to do that. That's a massive
Right.
reduction in cash balances, nearly 50% reduction in cash balances. Do they really want to do that for one deal with Samsung? Probably not. But like I said, their free cash flow situation, only 5 billion over the last 12 months, and the 2025 estimate is 2.6 billion, and the 26 estimate is 4.3 billion. So even over the next 2 years, actually, let's go out to 27. If we go all the way out to the end of 27 on this, 2.6 plus 4.3 plus 7, that's 11, that's 13, 14. Even the next 3 years of free cash flow is not enough to pay for that $16 billion Samsung deal. So again, there's a really good argument for why the stock won't work here. There are just some financial realities that the company is facing that are really hard. And I do think that any other company in the world would be unable to survive those financial realities, because what happens in the market when you're a publicly traded company is that if you are struggling, the market forces you to pivot. The market will send your stock price down. The market will exert pressure on you to change course, to do something different. The market cannot do that with Tesla stock because there is such a loyal following. Both consumers, retail people like you and me, but also institutions, really big dogs with really deep pockets, are very loyal to Tesla stock, very loyal to Tesla, the company, very loyal to Elon Musk. They are not going to exert that pressure to change. They're going to let Elon do his thing, let him experiment, let him be creative on the hope, on the idea that he's going to be successful, and it's going to mean huge returns for Tesla stock. So any other company in this position fails. But because it's Tesla, because it's Elon, I think they're going to have enormous success out of this. I do think Tesla stock could be a 10 bagger from here over the next 5 to 10 years as Robotaxi scales, as Optimus scales. I'm a huge, huge believer in Optimus, and the market's going to give Elon the leash, if you will, the rope, the freedom to be creative there and invest a lot there. And I think that's going to pay dividends in the long term.
Yeah, incredible. And I mean, it is an incredible story. And even big picture view, looking 5 years back, Tesla is still kicking ass as far as how much the returns have gone up.
I mean, Tesla stock actually has been stuck in neutral, I think, for the last 5 years or so. Tesla stock itself. Let's pull up that chart real quick. We can get that going. That's not hard to do. If we look at Tesla's stock chart over the last 5 years, I believe it's gone nowhere, net nowhere in the last 5 years. But it's up a bunch in the last 10 years. And in that sense, it kind of feels like Tesla stock is, remember how we talked about Bitcoin moves kind of like in a stepwise function, right? Like
Yeah.
it'll go nowhere for a long time and then just have this massive jump, and then it'll go nowhere for a long time, then have this massive jump. Tesla is kind of that, right? So we're at 320 right now. We did hit right around 300 back in January of 21. So the high of 21 and where we are today are pretty much the same. So you could say, one could argue again, that this stock has been flat for a very, very, very long time. But look, that's what Tesla stock does, right? Look at this. We were flat in the early 2010s all the way up to about 2012, 2013. Then we kind of had first commercial success with some of their vehicles. Stock jumped from split adjusted $2.50 up to $12. And then it went absolutely nowhere. 2013, 2014, 15, 16, 17, 18, even into 19, the stock went absolutely nowhere because they were struggling to scale production. Elon at this time was putting all of his eggs in the Model 3 basket.
Mhm.
He was saying Model 3 affordable electric vehicle. We're going to get that out there. We're going to mass produce it. It's going to be huge. It's going to save the company. But during this time, they were facing a lot of really hard financial realities, right? A lot of Wall Street firms were writing about potential bankruptcies for Tesla during this time. I remember covering the stock, and there were a lot of people out there saying it's going to go bankrupt. But here's another quarter. How much cash are they losing, et cetera, et cetera. Those were serious conversations back in the late 2010s with Tesla. Meanwhile, Elon will get on the conference calls and say, just wait, guys. Model 3 is coming. It's going to be huge. And guess what? He was right. He successfully ramped Model 3 production in 2019, throughout 2019, continued that through the COVID boom. And look at the stock. The stock went from a low of $12 split adjusted in May of 2019 to what? $400 by November of 21. Massive stepwise leap higher. And now here we are with the stock again, stuck in neutral for the past 4 or 5 years, with Elon saying, guys, just wait. I know the EV business is struggling. I know things are drying up, but Optimus is coming. Robotaxi is coming. It's going to be huge. Believe me, it sounds almost You just got to change the words, swap out Model 3, swap in Optimus and Robotaxi. It sounds the exact same as what he was saying in 2018, 2019. And so from that perspective, I think we're just in another one of these consolidation phases before the next vertical leg higher in the stock, which will happen over the course of 1 to 2 years. It'll be very rapid and very sharp. I think that's coming in 26, 27 as Optimus starts to get out into the real world, as Robotaxi does scale to maybe by the end of next year, the entire US population. Maybe it even goes global in 27. I think as those things happen, you're going to get one of those vertical moves higher in Tesla stock, and patience will be rewarded with profits. That's my view on the stock. It's again, I like to look at history, look at patterns of behavior. That's how the stock acts. Vertical, sideways, vertical, sideways. And I think now about to go vertical again.
Oh yeah. Well, I guess we'll see if history repeats itself. Now, Luke, I do want to do a bit of rapid fire on earnings reports.
Mhm.
Alphabet came out last week. I'd love to get your thoughts on that.
Yeah, Alphabet's earnings report. That for me, that was a mic drop moment for artificial intelligence. It was a mic drop moment in saying, "Hey, you know what? Everyone is using AI because Alphabet. Think about Alphabet, right? Like they have so many different AI products and services. They have their cloud stuff, around the infrastructure stuff. They have the AI video generation stuff. They have AI search. They have all these AI tools across essentially the entire economy. And last week's earnings report from them was a mic drop moment with them saying, in every single one of these verticals, AI is kicking butt. People are using our AI products and services. People are spending money on our AI products and services. People are seeing value in our AI products and services. Let me just rattle off a few stats about some of those AI growth numbers. Um, I think it was so AI mode, which is their new thing in Google search, right? If you go to Google search and you Google something, there's a little AI mode. It's a separate tab. You can click it and it kind of gives you a Gemini powered, more natural conversational response like ChatGPT. So that's their defense against the ChatGPT incursion on Google search. AI mode, pretty new feature, already up to 100 million, over 100 million monthly active users in the US and India where it has launched. So again, AI and search becoming the standard, if you will. VO3, we've talked about that before, the AI video generation tool. We finally got some numbers on that. More than 70 million videos have been generated on VO3 since May. So that's June, July. It's essentially 2 months. 70 million videos generated in 2 months. AI video generation has indeed arrived. The number of AI tokens that are being used monthly through the Google Cloud service, through GCP, the Google Cloud platform, that doubled from May to July. 2x, double the growth from May to July. That's unreal. Gemini app, their AI model app, the Gemini app, over 450 million monthly active users. More impressively, talk about growth, the number of requests in that app. So the amount of times people are going into the app and asking, hey, help me do this, help me do that, what's this, what's that, up 50% from Q1 to Q2. So in the first 3 months of 2025 to the second 3 months of 2025, 50% growth. Unreal growth there. Google Cloud backlog, what is it, $106 billion. They increased their CapEx by $10 billion to $85 billion. You don't increase your CapEx by $10 billion, annual CapEx by $10 billion if business is slow. Business is not slow. The AI boom is as vigorous as it has ever been, both at the infrastructure layer and at the application layer. Google Cloud backlog, $106 billion. That's infrastructure spending. VO3, 70 million videos. AI mode, 100 million users. Gemini app, 450 million monthly actives. That's the application layer. Both layers firing on all cylinders. That report to me, mic drop moment for AI.
Definitely. Yeah, those numbers do not lie.
Mm-mm.
All
Not at
right.
all,
So
bro.
let's look at ServiceNow.
Okay, so ServiceNow. Now we're talking about the application layer. Also have some numbers written down on them. I would say probably one of the largest enterprise AI software providers, right? They are spreading AI throughout the enterprise. They sell software to help enterprises leverage AI to make themselves smarter, more efficient, et cetera, make their employees more productive. That company delivered a double beat and raise report last week. Revenues up 21.5% in constant currency. That's their first acceleration in revenue growth since 2023. Remaining performance obligations, how much is on their book, up 28% year over year, the biggest increase in about a year. Margins up, EPS up 31%. The guide for 2H25, the second half of the year, stable. And it's all AI. So those numbers are fantastic, and it's all AI. Their AI Pro Plus deal count, so that's kind of their AI bundle of offerings, that was up 50% quarter over quarter. So in Q1 to Q2, 50% growth in essentially the amount of AI deals that ServiceNow was servicing to clients. 50% growth in Gemini AI daily requests. So that's consumer AI usage, essentially up 50% from Q1 to Q2. Well, now this is enterprise AI investments up 50% from Q1 to Q2. So exponential growth across the board, no matter where you're looking, what vertical you're looking at. They signed their largest cloud AI deal ever in Q2 at over $20 million for a cloud AI service. ServiceNow did. Exxon, Standard Charter, NVIDIA, they're all in the early stages of rolling out ServiceNow AI agents. Agentic AI was a huge part of that conference call. Management kept talking about the potential of agentic AI. We're just in the early innings of it. Enterprises are going to really deploy agentic AI. It's going to really change the game. Huge money coming into that space. So if Alphabet was a mic drop moment for all of AI, ServiceNow's report was a mic drop moment for enterprise AI. Enterprises are hungry for AI applications, and they are spending hand over fist to get AI and deploy it throughout their organizations. Great read through for all AI stocks, in my opinion.
Definitely. Yeah, I mean, I can't help but be curious that, as AI progresses, it almost feels like week to week for us. What is Q3 going to look like? What is Q4 going to look like? It's it's kind of hard to wrap your head around.
Yeah, I mean it's exponential growth across the board. It's absolutely exponential growth across the board. You are seeing no slowdown whatsoever. We're 2.5 years into this boom, a little bit more than 2.5 years into this boom, if you want to consider the start in November 2022 when ChatGPT launched, and there is no sign of a slowdown, no sign at all. And that's what all of these earnings reports are confirming to me, which means the last 2.5 years, the stock market regime of the last 2.5 years has been AI stocks win, everyone else lags. That regime is going to remain true for the foreseeable future.
Definitely. Let's take a look at another household name in Spotify.
Yeah, so Spotify did not have a great earnings report, but that's because of they missed Q2 estimates. They had a weak guide for Q3. That's not because of anything structural. That's because of there were some foreign exchange headwinds. FX has shifted in a manner. They're taking a $200 million, 200 million euro hit rather in the Q3 on that. They're getting some regulatory charges. That's diluting gross margins. They don't want to hike prices anymore, at least right now, because they did a big round of price hikes in 23 and I believe in 24. So they kind of want to slow their roll on the price hikes. And because of
Right.
that, the growth rates are slowing and the stock dropped this week when they reported. But I love what I'm seeing at Spotify. This has been one of my favorite AI applier stocks for a very, very long time. I think this dip is a great, 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 great buying opportunity. It's into some really strong technical support levels. The valuation has reset. RSI is getting close to oversold territory. This is a time to buy the dip in Spotify stock. Those FX headwinds are going to go away. The regulatory charges are going to go away. Meanwhile, they're doing some really cool things with Gen AI. So initially they had that DJ thing, just Spotify DJ, their AI DJ. And that was cool. I used it. A lot of people didn't like it, but I used it. But now they're really getting into Gen AI stuff. So the AI is having a conversation with you on the app. It wants to know where you are, what you're doing, what you're looking for. You essentially give input to the AI. So it's not an AI that assumes everything about you. It's an AI that knows a lot about you. But then now you have a conversation with it to really fine tune a playlist for you at a particular time of the day or when you're doing a particular thing. I think that's really cool. I think they can really amp up those features. They're trying to create a super fan tier. There's going to be a super premium price tier for them. I think they can amp up the Gen AI features, roll that into the super fan tier, and then all of a sudden you can have like a lot of people paying up, maybe it's 100% more than what the current subscription. Maybe they're paying 20, 25, $30 a month for a Spotify superfan tier. That's going to really recharge the revenue growth momentum. That's going to really recharge gross margins. This stock does follow gross margins. If you can hike prices without increasing costs, then boom, that's immediately additive to gross margins. I think the stock's going to rebound really, really nicely. One of my favorite AI applier stocks. It's on a dip. It's time to buy. I think the stock rebounds really, really, really nicely over the next 6 to 12 months.
Oh, very fascinating. I was going to ask, but you answered my question already. How would a company like Spotify build more runway? But a super fan idea with more integrated AI models does make sense.
Yeah,
Personally, I use Spotify myself, and I would be curious if it did get a lot better, would I pay more? So,
Yeah, I mean their user growth trends are very stable. So they're growing and they have been growing monthly active users and premium subscribers both around 11 to 12% per year. That hasn't changed. In this previous quarter, that was the same. The guide for Q3 is the same. The reason the stock sold off has nothing to do with underlying user growth trends. So the user growth trends there have been stable. That is definitely a steady growth vector they can rely on for a long time. The growth vector that's going to get the stock working again is going to be a super fan tier, is going to be really amped up Gen AI features that make the Spotify value prop super compelling. So a lot of people are worried, right? Like, isn't music streaming commoditized? Like, why can't you go to Pandora or YouTube Music or whatnot? AI is the differentiator there. Okay.
right.
Gen AI could be a huge differentiator there. If they can really dial in their efforts there and come out with the super fan tier that has a lot of Gen AI features, then yeah, you know what? That's a whole nother leg of growth for Spotify stock. So again, like I said, one of my favorite AI applier stocks. It's been running away super, super hot. You don't want to chase rallies like that, but now it's finally having a big pullback. This is the time to buy. If you missed earlier, this is the time to buy.
All right. Time to buy. Next up, we got SoFi.
SoFi has been one of my long-term favorites. Brooke, you and I have known each other for a while. You know that I've been a huge fan of SoFi for a very, very long time. I do not like the incumbent banking institutions, the Wells Fargos and the Bank of Americas and the JP Morgan Chases and all that stuff. They're boring. They have horrible customer service and they are not digital first. Give me a digital first tech native platform built from the ground up with technology for the modern era. That is SoFi. I love their mobile banking experience. And apparently, so do a lot of other people now, too.
Mhm.
They just reported earnings, absolutely blockbuster numbers. I mean, a monstrous report. That report was also double beat and raised. I'll rattle off some numbers for you. Member growth, they grew members by 34%. They grew revenues by 44%. Adjusted EBITDA margins rose 600 basis points to 29%, a new record. Adjusted EBITDA itself rose 80% year over year. They hiked their guidance, now calling for full year 2025 revenues to rise 30%, EBITDA to rise 44%. This company is absolutely on fire. Brooke, the bull thesis of them becoming the new personal finance platform of choice for younger consumers is becoming reality. I do think the stock is a bit richly valued. I do think technicals are a bit extended. We did clear above some major technical hurdles, and now we're kind of in an uncharted territory. This is a natural place for the stock to take a breather. I think short term, probably some choppiness, but I think the long-term future for SoFi stock, it has always been really bright, but now it's getting really clear. It's becoming
Right.
clear they can become one of the more important personal finance platforms, more important banks in America.
Yeah, definitely. Yeah, the consensus, as far as my peers are concerned, is the incumbents you do not want to go to. You don't want to bank with a Chase.
Well, I
But
mean, and you're seeing that across the board. Like SoFi's been the poster board for it. But whether it's a payment thing like Sezzle, that stock's been on
Mhm.
fire. Whether it's another personal finance app like Dave, that's been on fire. That's for supposedly for lower income cohorts that kind of get screwed over by traditional credit scores. Dave has their own AI powered lending to help people get money there. So there's just a lot of really cool new fintech disruptors that I think are successfully disrupting what are lazy, boring, old incumbents that deserve to be disrupted. And it's happening in the trading world too, right?
Right.
Robinhood, Coinbase, like these stocks are disrupting. These companies are disrupting your E Trades and your Fidelities and your old brokerages that kind of suck, to be honest. So long live the disruptors. Even if they don't win, they're going to force positive change. And at the end result for us as consumers is going to be better products, better services. But I do think SoFi is successful in disruption. I do think Robinhood is successful in disruption. Coinbase is successful in disruption. These are all great stocks to own right now. FinTech is having a moment for sure.
100%. Okay. And then I want to move to two more pretty quickly here. We got Rambus and Celestica.
Yeah, so we're recording this on a Tuesday, July 29th. On Monday, July 28th in afternoon, and then the morning of Tuesday, July 29th, we kind of had a string of what I would say smaller but still very important AI infrastructure companies report earnings. Celestica is one of them. Rambus is one of them. Cadence is one of them, EDA software provider. And Corning is one of them. GLW is the ticker there. Those reports were all great. They were essentially all beat and raise reports, and they all had the same theme. AI infrastructure spending is not slowing. AI infrastructure spending will not slow. Demand for our products, which go into these data centers, go into this AI infrastructure, is not slowing and will not slow. So all these companies smashing estimates out of the water and hiking guides to say, you know what, growth is going to stay hot for the foreseeable future. So again, the theme of the earnings season so far has been mic drop, mic drop, mic drop, mic drop for AI everywhere. Infrastructure layer, application layer, consumer oriented, enterprise oriented. Doesn't matter what vertical you look at, what horizontal you look at, what industry you look at when it comes to AI, the story is the same. Nothing is slowing down. And that's why we talk about our acronym AI with AI. You got to be all in with artificial intelligence. AI stocks have been the winners of the stock market regime over the last 2.5 years, and that stock market regime is not going to change anytime soon.
Got it. Yeah. So, I mean, speaking of the markets in general, earnings have been pretty great with a couple of exceptions, of course. I'm just thinking back to, your thesis a couple of weeks ago that the second half of the year, we will see a rally. Are you still sticking to that?
Yeah, absolutely. I definitely think we're going to see a second half rally in markets. So we are getting strong earnings. I
Mhm.
think the simplest way to look at it is stock prices follow earnings, number one. Number two, this is a tech-driven stock market rally, right? It's all about tech. It's all
Right.
about AI. It's all about tech and AI stocks. So if you kind of combine one and two, then that means this stock market rally is all about, it hinges on tech and AI earnings. If those tech and AI earnings come in strong, continue to come in strong, then the market's going to go higher. When they stop coming in strong is when the rally is going to end or at least slow down. That's not happening right now. We just talked about it, whether it's
Mhm.
Alphabet, ServiceNow, Celestica, Rambus, Cadence, Corning, doesn't matter who you look at. The AI and tech earnings are as strong as ever, and therefore AI stocks and tech stocks are at record highs. And I think they're going to keep on pushing record highs. So that's really the core thesis or the core tenet of my bull thesis right now. Additional kind of elements of it are trade tensions are easing. We got the deal with the EU, a 15% rate over there.
Right.
We're probably going to get a deal with China. I think that rate's going to be pretty low as well. I think net, we kind of, what you have to understand is there are the tariff rates, they announced tariff rates, and then there's the effective tariff rates. Because when he announces a tariff rate, Trump announces a tariff rate, he announces it at 15%, but then, oh, semiconductor equipment is going to be exempt. They're only going to pay 5%. Oh, auto parts, if they're under USMCA, are going to be exempt. So there's all these exemptions and carve outs after there's the baseline rate. So baseline 15, you add in all the exemptions and carve outs. They're not going to pay this tariff. They're going to pay lower, et cetera, et cetera. The effective ends up falling to like 10, 9, 8%, something like that. So considering all of the tariff deals we're getting, the rates are being announced between 15 and 20%. The effective rates then that are actually to be applied to the economy and the ones we need to factor into our calculations, into our mathematics of the market are going to be around 10 to 11%. And that's totally manageable. That's what the market was bracing for. The market wanted that. The market's getting that. That's, 1% hit to GDP, a 1% lift to inflation. Both of them can be manageable and offset by other things. So they might not even ever show up in the data. So I think, the tariff stuff, I said the trade war Drama is going to fade into the rearview mirror by the middle of August. I maintain that belief. I think within the next 2 to 3 weeks, we won't even be talking about the trade war anymore. And then that gets into the third tenet of my bull thesis, which is the economy is just going to get a lot stronger. We've seen the economic data get better. Consumer confidence is rebounding after that trade war shock. We're seeing high frequency data improve since the trade war shock. We're seeing earnings. We're seeing a lot of commentary be pretty positive about economic growth trends improving over the next few months. So I think as that trade war nonsense gets put behind us, we are going to get a broad economic strengthening that's going to allow for markets to continue to push higher. So yeah, fundamentally, I remain very confident in markets. Technical is just a bit frothy. Maybe we're due for a little pullback here or there, but that'd be an opportunity to buy because the underlying fundamentals, the core fundamentals of the market, whether it's technology, AI, or earnings, or the economic data, or the trade tensions, whatever it may be, they're really good right now. So I think the market's got a good runway over the next 6 to 12 months.
Yeah, I mean, I love the sound of a buy the dip opportunity, but I am curious. Do you think this will apply to cryptos? And if so, where should we point our attention regarding that crypto market?
Yes, I think it does apply to cryptos. I think Bitcoin is just going to start acting like and has been acting like, but will even more so act like a Mag 7 stock. It's just another Nvidia. It's just another Tesla. It's just another Meta. It's just another Microsoft. So it just maybe a levered version of those, higher beta version of those. But I think as tech stocks rise over the next 6 to 12 months, you're going to see Bitcoin rise as well. I think it's going to be really boosted because of increased risk sentiment that although the markets have rallied in the last 2.5 years, it's been a really strong rally the last 2.5 years for the stock market. Risk sentiments have not really followed suit. There's been a lot of doubt, a lot of skepticism. Retail investors still feel burned by 2022. They're skeptical to get back into it. I think that is starting to change. You're starting to see meme stocks make a comeback. You're starting to see Wall Street bets get some energy again. You're starting to see these investor sentiment surveys start to improve pretty meaningfully. You're starting to see a lot of signs that, hey, you know what? Sentiment is turning a corner like it did coming out of the COVID pandemic. And I think that puts us in a position, sentiment wise, similar to 2021, late 2021 or late 2020 and throughout 2021. That was a period of great gains, great strength for Bitcoin, and a period of even bigger gains and bigger strength for altcoins. So I think we're going to see a lot of strength in the crypto markets. I think Bitcoin's going to go to 150, $200,000 by the end of the year. I think 200,000 is a very reasonable call. And then I think that altcoins are going to join the rally in a significant fashion. And when you're looking to play altcoins, like, what altcoins should you buy? I think you want to look at three verticals. You want to look at AI, you want to look at tokenization, you want to look at stable coins. Find altcoins that are tied to one of those three narratives. Because AI, obviously, super hot, going to stay super hot. Tokenization, you're starting to see some big moves there with SoFi and Robinhood and other trading platforms getting into tokenized equity. And then stable coins, Genius Bill, Amazon, Walmart, MasterCard, they're all looking into stablecoin issuances. So I think if you are going to dabble in the altcoin markets, find altcoins in one of those three verticals, either AI, tokenization, or stablecoins, and preferably find one that's got a relationship to all three of those verticals.
Right.
Those are probably going to be your best performing altcoins over the next 6 to 12 months.
Awesome. Okay. I want to shift over to exponential tech.
Mm-hmm.
Now, the first thing I want to talk about is read about a school in Texas. It's called the Alpha School, and it is an AI school. And their curriculum, if you want to call it that, their general schedule is a far cry from the traditional public school and even the private school model, where I think it's maybe 2 hours of actual learning, and then the rest is almost open activity.
Yeah.
What are your thoughts on that, Luke? The
Yeah, dude,
future.
I love that school. I love the AI school concept down in Texas, the alpha thing. I think it's awesome.
Mm,
Um, because uh just traditional schooling, I think, is failing a lot of people in terms of equipping them with the skills necessary to succeed in life, financial literacy, social competency. I think there's a lot of things that school is not traditional schooling architecture is not equipped to handle or has been failing at over the last few decades. So I think we need to rethink that. And I think AI gives us a tool to effectively rethink that. I do think that you know, the regimen of using AI to compact my traditional school learning to 2 hours, and then using the time that I just saved, call it 6 hours, to learn more real world practical skills, life skills, with the help of AI as well. That sounds like you're going to create a student, more importantly, a person who's going to be more valuable to themselves and to society. So I love what they're doing down there. I think tuition's pretty steep, like over $40,000 a year. So it ain't cheap, but if we can somehow figure out that model and cheapen it and democratize it so that it becomes a public school model in some senses, maybe this is a reason the government should invest more in AI deployed throughout education. That'd be cool. That would be, I think that'd be hugely beneficial for society and would be an angle for America to regain its educational dominance over the world, which it has lost. So I really am supportive of uh, what's going on in Texas with the alpha situation. I do think AI powered learning is the future. I think the model they've created, it makes a lot of sense to me.
Okay. I mean, not to get too far in the weeds, but what wouldn't it be more beneficial to have teachers in this context with AI?
That's what the system is set up to do. I
Yeah.
believe that the 2 hours that's condensed for traditional school learning is just AI programs, but the additional 6 hours that you're saved that you're now using with practical skills, that's AI plus what they're calling. I think they call it a guide. They don't call it a teacher. They call it a guide, like a human guide to help you navigate these practical concepts. So it is done with the help of a person. So that's why it's expensive, right? And that's what I'm saying.
Mm.
That model is not going to be democratized across America because it's super expensive. Essentially, everyone has their personal guide, right? You can't have that. That's not scalable.
Right.
But is there a way to make that scalable? I'm sure we'll figure it out, and all of learning will be redefined. You can look at stocks like Coursera, maybe Duolingo plays a role in this game, right? They got that AI learning application that if you train an AI, a language model to be really good at teaching you a language, you can probably take that, iterate it, change it a little bit, tweak it a little bit, and make one that's really good for teaching math, make one that's really good for teaching history, make one that's really so all of a sudden maybe Duolingo isn't, we call it the AI language learning application provider. Maybe it becomes the AI curriculum provider, right? Like all of a sudden, Duolingo's value prop becomes way, way bigger. Their addressable market becomes way, way bigger. And that stock, which may look richly valued today, doesn't look richly valued when its addressable market grows by a factor of 10. So I think this is a great reason to buy Duolingo. I think Coursera is a name in this place that you want to be looking at. But I think the whole narrative of retooling, reskilling both the workforce as well as the educational world, that's an industry that I think there's a lot of growth potential over the next several years.
Yeah, definitely. I mean, I also believe that there should be some fundamental changes in the way we school, but switching to a strictly AI model seems pretty interesting because I think school is a part learning, but also part socialization. So how much do we lose out when we apply AI to all of it?
Yeah, you don't want to get rid of the social factor.
Yeah.
Keep recess, keep lunch, keep those things, and you definitely keep college, right? I mean, college people learn more from their social experiences than they do in a classroom. At least that's what I believe.
Mm.
All the people I talk to don't really use what they learned in college in the classroom to life, but they learn the people skills of managing, being on
Right.
your own, not having parents around. Like that's a super valuable experience. So I don't think college changes, but I do think the K through 12 experience can change while maintaining social dynamics and social skill teaching and all that stuff, maintaining that aspect of it, but optimizing, making more efficient the other side of it. Because again, I think a huge problem here is that people leave high school without real world skills. They can do calculus problems, they can do algebra, they can list off elements in the elemental chart, but They don't know anything about taxes. They don't know anything about
Mm,
stocks. They don't know anything about bonds, right? Like, I think literacy, real world literacy, needs to improve, and I think this gives us an opportunity to do that.
definitely. Okay. Moving on to more technology talk. I wanted to talk about the R1 that Unitree just launched. It's a $6,000 robot. I looked at a couple videos. The biggest takeaway I had is they really like making that robot do cartwheels. Do you think there's anything significant about this particular robot? Is it legit?
Yeah, I mean, they really like making it do cartwheels, and it's tiny. It's
Yeah.
like a little. It's
Unfortunate.
it's a hobbit. That's why it's $6,000. It's small, it's lightweight, doesn't have as many actuators, and the size of the components necessary to power it are smaller. So that's how they made the R1. It's only $6,000. I think it does have AI in it, but I don't think it's super complex AI.
Right.
There's one somebody like I don't know what they did. I've got to look into it, but look up Rizbot. You guys should go look up the
Mhm.
Rizbot. I think somebody like let a Unitree robot in the wild and they kind of jerry rigged it to give out compliments. So now there's this, I believe it's in Dallas. There's this Unitree robot walking around that just hands out compliments like Riz, the
Right, right.
kid slang for
As the kids say.
having game or whatever. Yeah, he has Riz. He's handing out compliments and uh, just being an overall nice robot, I guess, handing out kindness.
Mhm.
So like there, when I look at all this stuff, what I see is a world that's about to change so much. Right? Like that's what I see when I hear about the Rizbot or hear that there's a $6,000 robot for sale in China. Uh, the world's gonna change so much
Right.
that we are at a point where we have humanoid robots serving popcorn in diners. We have humanoid robots playing soccer matches. We have humanoid robots that can be made cheaply enough to be sold for a profit at $6,000 per unit in China. We have robots that are walking around bars in Dallas handing out compliments. When you put it all together, it's like we have robots doing a lot of things right now. There aren't that many out there, but the ones that are out there, I mean, they can do a lot of different things, and it's only 2025. So this tech's going to improve exponentially. The hardware side of it's going to improve exponentially. The software side of it's going to improve especially exponentially. And the result is going to be enormous growth in the humanoid robotics industry over the next 5 to 10 years. And I do believe, again, like I said with the Tesla opening, I think these are going to be in 50 to 70% of households within 10 years. I think by 2035, 50 to 70% of homes in America will have a humanoid robot.
Yep.
This is a big change that's coming. So be prepared for it, invest in it, learn about the robot stack, learn about the robot supply chain, find companies like Ambarella, find companies like Lattice Semiconductor, find companies like MP Materials. These are the next batch of mega winners in the physical AI wave of the AI boom.
Got it. Yeah. And said it once, we'll say it again. This is the worst it's ever going to be. So, be prepared.
100% true.
Now, I do want to move on to another Chinese company. Z.ai is a startup. They recently launched a AI model called GLM 4.5. And it is set to be the cheapest, kind of calls back to DeepSeek.
Mhm.
Um, what do you think about that? And what what does that do for the AI investment landscape, Luke?
Yeah, so I think the maybe most underrated shift occurring right now in the AI industry is a tectonic shift from LLMs to SLMs, from large language models to small language models. I think we kind of talked about this a little bit before. The first wave of AI model making was all about creating these omniscient models that were hosted in data centers. They were very massive. They have all of these gigawatts of power powering them. They have all this data. They're trained on everything in the known universe. They know everything.
Hmm.
And these models, they're very, very good. They're very, very helpful. They're very, very useful. I use Chat GPT every single day. Every model out there right now is essentially one of these large language models, one of these LLMs. But the problem is that they're so compute intensive, so power hungry that when we bring AI to the edge, when we want to really integrate AI into the physical world, it's going to be impossible to proliferate physical AI devices and applications if they always are having to call back to this data center in Memphis, Tennessee. Right? I mean, if you want self-driving cars, the AI brain in them can't be consistently calling back to an AI data center
Right.
in Tennessee. Because what if something happens with the connectivity there? What if there's some latency issues? What if, like, there are so many things that could go wrong in the communication between those two. That could be the difference between a self-driving car avoiding the kid crossing the road and hitting the kid crossing the road. It's life or death. As AI goes to the edge, same with humanoid robots. Right? Humanoid robots, they're going to be outside of this little pipsqueak R1 that costs $6,000. They're going to be big and they're going to be heavy and they're going to be strong. If there's a connectivity issue with when it's, a humanoid robot in Seattle is communicating with a supercluster in Memphis, Tennessee, if there's a latency issue, there's a connectivity issue, that robot could boom and it knocks out a kid, breaks a leg, kills somebody. Like that's something that could happen. So I think as AI goes to the edge, as AI goes physical, as we start to get humanoid robots and self-driving cars and warehouse automation and things like that, we are going to need to shift from LLMs to SLMs, more compute intensive, smaller, more efficient, small language models that can operate on chips locally on the edge. There's no latency, there's no connectivity issues, none of that because the robot is not speaking to a supercluster in Memphis, Tennessee. It's speaking to itself within itself with a bunch of SLMs on these little chips, these kind of specific XPUs, I think, that'll be
Right.
built for these SLMs in these physical AI devices. So I think this is a massive shift that's happening right now in the market. I think it's completely underrated. I think it has huge investment implications because while the supply chain stack for creating LLMs and the supply chain stack for creating SLMs, there's a lot of overlap between the two. There are some unique differences. For example, the LLM stack is all about NVIDIA GPUs. That's why NVIDIA stock has been the biggest winner in the AI boom because they are the heart of LLM development. Not so true in SLM development. NVIDIA GPUs are still important, but there is now room for XPUs, VPUs, these other sort of TPUs, these other sort of processing units to kind of work their way in there and uh, and become more important to the stack. So I think you'll see makers of those chips have their NVIDIA moments next. And NVIDIA kind of still a great stock, still going to go up, but it's not going to have that explosive growth that maybe some of these smaller XPU makers will have. So there's some differences, subtle differences, but important differences if the world does shift from LLMs to SLMs, if we do shift from centralized compute to decentralized compute, if we do shift from massive data centers to edge AI processors, you got to know those supply chains. Because that's where the money's going to shift. And then as it relates to the China thing you just mentioned, I think China's ahead of us on this shift. DeepSeek was
Mm.
the first kind of wake up call that they are shifting to SLMs, that they're ahead of us on the shift to SLMs, and that these SLMs, if put together, can be as good as one LLM, yet still far more efficient and less compute intensive. The new GLM 4.5 model out in China is another wake up call that hey, China's really going in here, and I think the U.S. needs to start making some moves into SLMs.
Right. Yeah, they're beating us in the quality versus quantity metric. It sounds like, as far as large language models are concerned.
Yeah, I think that's an apt way to put it. Yeah.
Wow. Well, yep, got to keep up. Now, I do want to move on to our exponential stock series. I got the
Yep.
first one queued up for you right here. We got FIX or Comfort Systems.
Yeah, industrial HVAC really is what's going on here. AI infrastructure story, guys. I mean, this is an AI infrastructure story. You may not think comfort systems. How is that AI infrastructure? Well, you
Right.
need cooling equipment. You need stuff. These AI data centers, they run hot. They run super hot. You make these super clusters out in Memphis, Tennessee, and guess what? They are hot. They are Phoenix hot. It's 101 degrees here, 103 degrees right now here in Phoenix. So they are Phoenix hot, hotter than Phoenix. Here's the stock. Absolutely ballistic. I think it's a great play on AI infrastructure. You can see it's a long term winner. You kind of pull it all the way back. It just keeps going higher and higher and higher and higher. Yes, we're short term overbought right now. What's that RSI? I'd love to see what that RSI is. Let's see. RSI of 83. So again, you don't really want to chase rallies like this, but this is
Yeah.
one that I would buy on a pullback. It probably, it's had this parabolic move, consolidates for a little, lets the 50-day moving average catch up. Maybe you retreat down to 600. The 50-day catches up with it. They converge right around 600. That's probably a place you want to buy the stock. What's the previous top? Let's see. That's also a level to watch. Is that where we bottomed right there? Those are pretty similar too. So 550 might be a level to watch here too. But I think in that 550 to 600 range, I think it's very likely we do come back into that range. If and when we do, this is probably when you want to buy in that dip because this is a very solid AI infrastructure play.
Wow, that is such a fascinating proxy for how powerful the AI boom is that an HVAC company is going vertical, right?
Yeah, exactly, right? I mean, it's the halo is enormous, and if you're in that halo, your stock does this, and if you're not in that halo, your stock gets crushed. So just invest in the halo, like that's and the halo.
Yeah,
Like I said, it's wide industrial HVAC, part of the halo.
definitely. Next up, we have hymns.
Oh, I love Hims, man. Hims and Hers. I think this is the new front door to healthcare. I think the stock is really, really strong. I think the company is really strong. It's been on a run, but it's consolidated recently because they've had some issues with their weight loss drug. But for those
Right.
of you that don't know, essentially you can download Hims, you can download Hers, put it on your phone, and it's like your doctor. You can consult with it. You can have it issue you over the counter medicines. It's much more convenient than having to go to a doctor's. It's telehealth service provider, but they do it the best. It's app first. I like that part of it. I use their retinol cream, kind of like an anti-wrinkle, anti-aging cream. Been a long time customer of that for them. No complaints whatsoever. Like I said, the stock has been kind of consolidating because of the GLP-1 stuff. They were getting into GLP-1s and then got pulled from their platform, but now they're getting into generics of it. I think they're going to figure that out. I think just long term, inclusive of GLP-1s, but beyond GLP-1s, hims and hers, I think is a fantastic long term play on a transformation, a very long overdue and necessary efficient transformation of the healthcare industry, how consumers access healthcare.
Definitely. Way more convenient than scheduling a doctor's appointment that's 30 days out, right?
Yeah, I full disclosure, maybe I'm biased, so that's why I like Hims and Hers. I haven't been to the doctors in maybe 10 years, maybe.
Wow.
I don't even know if I have a doctor. I don't know. So maybe that's why I like Hims and Hers so much. I really don't like the old school healthcare process. It turns me off so much. I think it's gross. I hate going in. I always feel like people are sick. Like I'm gonna get sick. I do
Mm,
not like it. Uh, telehealth. I just think it's so much better, so much cleaner, so much easier. Give me the Amazon of pharmacy. Give me the Amazon of healthcare. I think Hims and Hers is that.
wow. Good stuff. Okay. Next up, we got Oklo, a really fun one.
Yeah, we've talked about Aklo a few times. It keeps coming up because the stock keeps, well, doing one thing, going higher. Aklo, SMR creator, more specifically a micro reactor creator, nuclear energy play, signing deals with big data centers. Stock has been red hot. Buy it on pullbacks. Very simple advice here. I think this is a fantastic company with a very bright future. Nuclear energy is unequivocally turning into the choice power source for AI data centers. Microreactors make a lot of sense for individual data centers. If we do go to SLMs, I think there's still going to be some compute required, and that the microreactors actually have a huge value prop in these sort of smaller, more compact data centers that could be used for SLMs too. So Oklo to me wins no matter how the AI
Right.
uh, industry evolves over the next few years.
Yeah, definitely a safe bet. Okay. Another one, we got Bloom Energy.
So this is energy storage, Bloom Energy, kind of back when like solar and storage were going to be a thing and hydrogen and storage were going to be a thing. Bloom Energy was a hot stock, but then it got crushed. But now it's bouncing back because some of these energy storage solutions can indeed be used at data centers. You can see here's the stock back in that kind of post-COVID boom went absolutely crazy. Boom, 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 boom. The stock took off from what, $3 right during, remember that March 18th, 2020? That was a crazy time. And then we got up to $42 by early 21. And then just kind of this secular decline throughout 21, 22, 23, 24. And then we bottomed in late 24 around 9. Now we're back up to 35, clearing a bunch of technical hurdles. I think this one continues to rally. The energy storage value proposition for data centers just it makes sense as uh, a multifaceted approach to powering these data centers. I think the long-term risk here is fusion. I think once we get to nuclear fusion, there's really no need for any other energy source. But that is a risk mitigated by time. Fusion
Mhm.
may be several years away. Even when we do make it a reality, scaling it's going to take a very, very long time. So even if fusion does become a thing, I don't think it's a real risk for Bloom Energy for another 10 years. And so I think Bloom has runway as an energy storage play on AI data centers.
Got it. Okay. Bit of a flashback hearing about hydrogen as the new wave of energy.
Uh, One of the funniest interviews, maybe funny is the wrong word, one of the most obnoxious interviews that I've ever seen is when Trevor Milton, the former CEO of Nikola, remember Nikola?
Batteries?
Yeah,
Yeah,
hydrogen
yeah, yeah.
trucks, fuel cell
Oh, right.
trucks. Uh, he went on an interview with Tucker Carlson recently to try and rationalize, what he did and explain his side of the story. And it's a crazy interview. I'm not going to get too deep into how I feel about it, but I was around when Nikola had their massive stock price surge, and I was around when the claims turned out to be entirely false, and I was around when the stock went to zero. Uh, so it's interesting to hear the quote unquote other side of the story. When you said hydrogen, I just listened to that interview, I think last week. Um, I have strong feelings on it. I'm not going to tip my hat as to which way it goes, but uh, hydrogen had its moment and now it is no longer around, and I don't think it really makes a comeback.
Yeah, not with nuclear uh, being on the forefront. But on to the next one or the last one. We got Wayfair.
Wow, this one shocks me, man. I mean, it's because of these trade deals getting done off in Southeast Asia that aren't as bad as people were fearing. Uh, but man, this stock is gone. I mean, this stock got crushed. So this is the long term chart, right? It's still
Yeah.
kind of range bound long term. Had that massive post-COVID boom, consolidated for a bit, and then massive crash, and has been consolidating at super low levels ever since. Okay, so now let's zoom into the recent action. Got absolutely destroyed on the trade war stuff. I mean, from $50 all the way down to $25, and then it's been a straight line back ever since. Then 25 now up to $67. I think 52-week highs on the stock, absolutely soaring. I wouldn't chase it. I would not chase it. Here's the problem. Technically, this stock is in what I would consider a stage four or stage one basing at a bottom. So this is kind of how I look at the stock. Let me show you. Let me pull this down. Boom. Let me pull this up. Boom. Okay. So this is how I look at the stock right now on a technical basis. Let me get my colors right so you guys can kind of really see it. Okay. This stock crashed. And then now it's just been consolidating ever since late 2022, late summer 22. So I'm consolidating between, I want to say, $20, $25 and $80. And it hasn't really broken above that. And right now we're at 67. So we're near the top of that. I would be interested if we break above 80. We break above this $80 level that this sideways channel is defined as the top, and then boom, all of a sudden maybe we do retake a lot of those. That would be technically significant. But we're not doing that, so I'm technically not that interested in the name. Fundamentally, I don't know, man. I mean, the housing market's still frozen. Are people really buying a bunch of furniture right now? I don't think so. I do think some of these tariffs are going to show up in the cost of furniture. I think it's going to hurt Wayfair's margins. I don't think you're going to get a lot of demand for this stuff. I don't really understand the rally here outside of, okay, we're getting deals done, but does that mean business is back for Wayfair? I just don't think so. Mortgage rates are still high. Housing market's still frozen. People aren't buying furniture. People are spending a little bit more, but not on furniture, right? So I don't know. I'm not a huge fan of it here. I don't think it's a legitimate breakout. If anything, we're going to go up to 80, hit our head, and get rejected, and then we're back in the sideways consolidation channel.
Gotcha. Yeah, I mean, I hear that the housing market is frozen, but real estate investors are still buying and renting to people. So that might be why people renting homes versus buying homes, trying to, furnish those homes.
Maybe, maybe. I don't know. Maybe. I don't like the bull thesis. I don't buy it. Again, I think the tariffs are going to show up in some way on their earnings reports, and it's not going to be pretty.
Well, fair enough. Now, onto a another fun tech story. This is our lifestyle section. Alibaba announced their AI glasses. This is almost the in the double digits of big tech companies that have dropped AI glasses. What do you think of those? The Alibaba glasses, and also your own personal Ray-Ban Meta glasses.
Yeah, you know what? The AI glasses, people don't believe me about these things. They're gonna be huge, man. These are gonna be huge. AI glasses are the next form factor. Glasses are the next form factor of consumer technology, and everyone's going in on it. Apple's going in, Google's going in, Meta's going in, Amazon's going in, Alibaba's going in. Everybody and their best friend. OpenAI is going in. Although I think OpenAI might do a necklace or a pen. I'm not really sure. They're getting too creative. But glasses are the next thing. I love my AI glasses. I think they're awesome. I use them as headphones for music. I use them as speakers to take calls when I'm out walking or gardening or doing something. I use them to contextualize and um, an image for me. So if I'm looking at something and I don't know what it is, or if I'm driving somewhere and I don't want to get on my phone, I can just tap this and talk to it, and it talks back in a good way. It informs me about my context and my surroundings. So I use it for quite a few things. I use it to take pictures. I use it to record videos. I love what's going on with these glasses, and I think it's only a matter of time before these glasses become a ubiquity. I really do. I think the parent company of Ray-Ban just reported that sales of these Meta Ray-Bans are up three times, threefold year over year. That's exponential growth. I think it continues. I know a lot of people don't believe in the glasses form factor, but a lot of people didn't believe in the iPhone form factor either. You can go and rerun all those clips of the iPhone's going to be a joke. It's never going to be a thing. Who wants this? Blah, 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 do. Well, I think in 10, 15 years, you're going to rerun a lot of clips of people saying, who wants glasses? Blah, blah, blah. And then we're all going to run AI glasses that are awesome. So I'm a huge believer in this. And I think it does fit into our whole kind of big picture investment theme of AI going to the edge, AI going from a big data center in Memphis, Tennessee to being put in the little frame of the glasses, AI going physical, AI integrating into the physical world, humanoid robots, self-driving cars, AI glasses, things like that. It's all one big theme, and the big theme is a shift from centralized AI to decentralized AI, and that shift has massive investment implications, and that shift is going to determine the next batch of mega winners in the AI boom, and what I think is the second half of the boom, which we're entering right now.
Yeah, that's awesome. As we were talking about hims and hers, I would love the idea of a wearable watch or bracelet that had AI power and that could just tap into all of your health, and it's right there for you, like
Oh,
something
that
way
would,
more
would
than
be
Apple.
lovely. That would be lovely. I think this is why Google acquired Fitbit way back in the day. I think this is why Apple's been so big into Apple Health. Like people are like, who the hell cares about all of these Apple Health upgrades that you're doing? They're gonna matter. They're gonna matter. Okay. I think health and AI are gonna have a massive convergence with these new wearable form factors. So yes, I think that's gonna be a massive thing too. Meta, I think, is behind on that. I actually think Apple and Google have the leg up when it comes to uh, health AI.
Yeah, definitely. Okay. And then our last segment here is the exponential question. We're looking through the comments on YouTube, and one of the reoccurring themes that came up was open door. And we talked about it a bit last week, but we'd love an update from your perspective, Luke, on open door, where it's at, and how we should be looking at it as investors.
Yeah, I mean, so Open Door, the same thoughts that I've had on it for a long time. Same thoughts I had on it when you covered. I think we covered it last week or the week before. I forget. Um, Long shot bet with highly positive asymmetric risk reward profile. I think Open Door has an opportunity to follow in Carvana's footsteps with even more leverage and more oomph because of the AI powered growth narrative. I do think they're doing some cool things with AI. I do think there's a lot of room to disrupt real estate agents in the housing market. Just the sheer volume and value of homes, a lot of leverage attached to that. The balance sheet itself is very leveraged. So I do think Open Door can follow in the footsteps of Carvana. What Carvana did in 23 and 24, I think Open Door can do in 25, 26, and 27. That may hinge a little bit on the path of interest rates. That may hinge a little bit on what the housing market does, how it responds to interest rates. A lot of things have to go right for Open Door. But the stock has been so washed out, so beaten up, so destroyed that, I mean, maybe downside here is 50 to 70%, but upside is honestly 100 bagger. I think that upside potential here is 100 fold. That's a risk reward profile you don't see many times in the market. So I think again, it's a long shot with a highly attractive asymmetric risk reward profile that, if things go right, could pay off an enormous sum over the next few years. But not for your lunch money, small position sizing. It's a high risk stock, a high beta stock. The AI bets elsewhere are a lot safer, if you will. Alphabet, Celestica, Rambus, Cadence, names like that we've talked about in the show, ServiceNow, SoFi. Open Door is by far and away the riskiest of all those names by an order of magnitude, but it also has the most upside potential of all those names by an order of magnitude. So for some folks, it's worth it. For others, it's not. But I do think that the rally we saw from 50 cents to $5, yes, in part powered by memes and Wall Street bets and short covering, I think there's more to it than that. And I wouldn't be surprised if the stock pushes, up back towards five and up to 50. I think that's possible. Long shot, but possible.
Got it. Okay. It's another segment of exponential questions. Again, I would like to open the floor to everybody listening. Make sure to comment, subscribe, like, do all the things, and we want to build this community. Is there anything else we might have missed this week that you want to talk about, Luke?
No, I think we're good. I think you've got a lot of topics covered, a lot of action in the markets, all in with AI or AI with AI. Um, Earnings have been really, really good, and that's what matters right now. Stick with the earnings. The tech earnings are good. The AI earnings are good. Stick with tech stocks. Stick with AI stocks. They've been the kings of Wall Street. They will remain the kings of Wall Street for the foreseeable future.
All right, sounds good. That's AI with AI. That's been another week of Being Exponential with Luke Lango. Hope you enjoyed it. We have, and we hope to see you next week. Take care.